Hey guys, this is Thomas, and we're going to talk about how we can trade using price action rules. Now, the structure started with the trading range because price is swinging up and down through the exponential moving average. And this 21 bar EMA was pointing lower down here, was pointing up here, but at this particular area is being completely flat. So this is a trading range structure. After that, market strongly reversed higher and we kept pushing and pushing higher. Now, this tells me that the structure is changing. It's no longer a trading range. It's forming a nice bullish move up, and I can no longer pay attention to this trading range because this is too short term. The pattern is shifting and this is now a bullish structure. And when I see a structure like this, we need to understand that there's almost always a bigger pattern. So what I'm trying to do, I try to locate a wider uptrend. I can do a trend line like this, put it at the top like this kind of fits, but when I put it at the top like this, because of course this would be massive overshoot and this is not really how price works, this pattern is way too flat. You have to ask yourself, by the time price reaches all the way down this key entry point, the downtrend is probably too valid, too strong, and it is a trend in itself. So there is no uptrend that's like this. Price action doesn't really work that way. So if I'm still looking for the uptrend, I can use this swing right here because this was the real point where price starting to working higher. So if I'm going to draw the first two major swings of this move, I'm just going to copy it. I'm going to try to locate the top. Now these were the highs that I chose, these two swings right here, and I ended up having a little bit of an overshoot, and it was hard to pinpoint a perfect trend line. But why did I decide to create a trend line like this with the overshoot? Because if you take a look, this is a very strong and steep move up, and every time you see at the very end of this the uptrend, the last few bullish bars being really large and really big, this most of the time represents exhaustion. It is a depletion. Take a look how far away price is from exponential moving average. Now I switched to 2500 tick chart to make it even more visible because 2000 tick chart has a little bit of a bearish bar. But if you take a look at 2500 tick chart, there's a nice bullish rally and there's a big leg up, correction, and the last second big leg up. This is very steep and we have 4 major bullish bars. And take a look at this last bullish bar. This is a very steep move. You're getting really far away from EMA and this really looks way too overbought. And this is the last depletion move. This is exhaustion, and after that correction a lot of times will be followed. You guys can see this is not a healthy trend. This is way too steep. Healthy trends are 45-degree angles. So this is not long-term sustainable. So for that reason, I'm deciding to focus on this as a overshoot, and there is a correction, and you need to draw the trend lines even for the shortened trend lines because the rules apply the same for the shortened patterns. There's a break, close outside of this trend line, and there's attempt to create new extreme, and price is now forming a trading range. We're moving up and down, similar structure to here. EMA is flat, and price is just oscillating up and down. So this is now a small trading range, but we traded up into this trading range. So what do I expect according to price action rules? I expect for price to keep working higher. Now this uptrend wasn't confirmed. You guys can see there's no third confirmation for this uptrend, so you cannot rely on this uptrend just yet. There is no confirmation, so you can only use it for bias confirmation, but you really mainly want to focus on the short-term ones and the trading range. This is what you focus on the trading range. Now, as there is a little move down, we already came up shy of this support, and this is already indicating something, and we're going to talk about what in just a minute. Take a look at this strong bullish rally up above EMA. This is now, good clue that we may head into a resistance because we're coming from the bottom. You expect for price to go to the top. You have an uptrend or trading range, but you have a bullish bias. So this is a reasonable assumption. Now, EMA keeps holding price, and this is the lowest low of this move down. And you guys have a first entry short, pullback, second entry short, failure. Now this is technically not a failure because this scalp hasn't failed yet, because everybody who went short here is still in this trade, but we cannot afford to wait for price to trigger above this bar right here because the move would already be made and the scalp would already be made. So when it comes to price action trading, the failure is treated when the first bar in the opposite directions appears. The direction is short, and this is the first bar in the opposite direction is bullish because we want to go long. So there's a new low, first entry short, second entry short, failure, and a new high, first entry long, second entry long. Price likes to move in twos. Two-legged pullback is a high probability setup. We're coming from the bottom, we're heading to the top, and EMA keeps holding price. This is my first trade for the day, and I ended up getting stopped out here because I wanted to enter above this bar right here, but we first triggered lower, we reversed higher, and I didn't enter on the engulfing entry because on the engulfing entry, the scalp would have been made. What I ended up doing, once we made the engulfing entry, I dropped my limit order, it came back, and it stopped me out. So I didn't really manage it properly. But if you guys take a look what the price action did here, this wasn't a great trade because this is a wedge formation. This is why when we came up shy here, this gave it room to create this wedge. You guys can see a series of lower highs and series of higher lows, and it's getting very wedge. You guys can see how very little room there is inside of this wedge, so no surprise we eventually broke down. So this was not a great entry, and you cannot enter all the way up to here when you're so close to these highs. So this was a good clue not to go long here. We came up shy here. And also the downtrend didn't have a new extreme. I ended up focusing more on the short-term trend lines because the trading range is tight, and in tight trading ranges we can't afford to play the short-term trend lines. But this one fits really nice, and the way you came up shy here tells you that you're most likely going to push lower. Now, as the market is pushing lower, you have a break, close outside, attempt to create new low, but you don't have a new low yet. You broke below the support, and most breakouts of trading ranges will fail. However, this is not a good setup just yet because you keep making lower highs constantly. There's a little bit of a bearish bias in here, so you just want to be patient and you don't want to do anything. And by the time market is pushing lower, this is now confirming that this is starting to look like a nice bearish move down. So what you're anticipating, you're most likely anticipating to look for a little bit bigger pattern as a downtrend, because price, if this is going to be a healthy trading range, we're going to break out below the trading range. We're going to make it back above it. But EMA kept holding price, a good bearish rejection, and market is pushing lower. So when I see a structure like this, I'm anticipating a second entry short at the key entry point or failed second entry long. And the market is pushing higher and is pushing higher like this. All right, so this is the lowest low of this entire swing. So this is where I start counting for second entries. I have a new low, first entry short, pull back, second entry short. I take a look at the short-term uptrend. Price action rules apply the same for the bigger patterns for the short-term ones as well. There is a break, move to a new extreme, indicating that the uptrend is no longer in play. Exponential moving average keeps holding price, and this is a third confirmation of this trend line. So we got two key entry points in a bearish structure, and this is a second entry short. This is a high probability setup. The signal bar is not ideal. There's a little bit of a bullish body, but it closed below EMA, indicating strong enough bearish momentum. And this was my second trade for the day, and I ended up taking even this lower high right after that because this was a second entry short, and this is now a confirmation setup. Lower high confirmed this second entry short. It's still being inside of the trend line, still below EMA. And take a look how you haven't moved too far. You have a second entry short, and right after that you have a lower high, and this is the perfect lower high when it's right next to the second entry short. There is still plenty of room to be made to all the way down to the swing, and it is right below the EMA. Great bullish, great bearish bar. This was a quick, easy scalp, and price suddenly ended up completely reversing. So as you see this, you're expecting a break at a new extreme, but it's not happening. So you see strong bullish reversal up, and you need to switch to the market you have. You cannot lean to the market you want. This ended up being most likely two legs down for the pattern like this, and a little failed breakout below this trading range. The failed breakout was just a little bit longer than expected because the bigger pattern was eventually up, so we traded up into this trading range. But this was still a decent enough entry to take both of these because the structure was holding really good, the EMA was holding really good. Now as the market is pushing higher right here, we are back in a trading range structure. You join the short-term trend lines, exponential moving average keeps holding price, and this is now a bullish structure. You may maybe finally create a new extreme for this uptrend right here because you traded up into this trading range, you have a little failed breakout to the downside, and you continue working higher. So on your way up, the trader is anticipating to get a second entry long at the key entry point, but there is never a no second entry long at the key entry point. Price just keeps pushing higher. Now there is a failed breakout above the resistance. There you guys can see a first top, double top, triple top right here. And this is a proven trading range at this point on. There's a break, close outside for the uptrend, new extreme form, price created a new high. And this is indicating that this uptrend right here is no longer in play. I cannot draw it wider like this, redraw it like this, because if I'm going to delete this, if I draw it wider like this, it fits at the top, but I'm disregarding the first swing right here. Generally, trend lines are drawn from the first two swings, and this swing is not being taken into consideration. I only consider this one. So there is a gap here. So this is not correct. Also, this is more of a trading range. So I'm really want to stick to the shorter term ones, the tighter ones, rather than the wider ones. So this one, take a look how nicely it fits throughout the entire area right here. So this is much better trend line, clear break, new extreme. You have a little failed breakout. You're quite far away from EMA, but this has been quite a strong move up. So you never know when you're going to get second leg. But then there is another push up, another attempt up, and there's a lower high confirmation of this failed breakout, and you're still very far away from exponential moving average. Exponential moving average acts as a magnet. Every time you're far away, you're most likely going to push back. So break new extreme, you're above the important key level, and most breakouts of trading ranges will fail. This is a nice lower high that is very close to the initial failed breakout. Now, if we zoom out and we take a look at the structure, we can see that this is a trading range, and we have a now big move down below EMA, confirming the bearish momentum. So we're not looking to go long on a second entry long. There's a new high, first entry long, second entry long. No, because the uptrend already played out. Structure is range. Most breakouts will fail. And as you have a big bearish momentum confirming push below EMA, or the other way around, we expect for price to potentially head all the way down here. If EMA is going to hold price, then it is a different story. But since EMA is not holding price and we're pushing below, when you have a second entry long failure, big bearish bar, this is a great entry to take according to price action rules. Trend line is holding, EMA is holding, and this is a key entry point, and once again the high probability setup. Take a look how I'm mainly focusing on the two-legged pullbacks and a couple of higher lows or potentially failed breakouts, but those second entries are high probability setup, and this is a second entry long, but under the wrong context. Context is not telling you to go long, so this is a great short entry. I think there was news right around exactly this area. I didn't take this trade live yet, because there were news, and you guys can see the news really didn't matter. It was a medium news, but you still want to be sure just not to get trapped. There's a new low, there's a first entry short, and you guys can see second entry long failure trigger right here. But on a larger pattern, larger visual pattern, this move right here looks like one leg, first entry long, second leg, second entry long. I don't want you to confuse you, because this is technically a third entry long, new high, first entry long, second entry long, third entry long. But on a visual pattern, this could be treated as a two big legs up. But I still don't want to mark this trade just yet. It is a first entry, and the second entry long failure happened right here. So just sitting patiently, you have first break for the downtrend and new extreme. So you expect for price to correct or straight up reverse. And there is little uptrend working higher, little break, and a new extreme form. Now, when I was watching this, I saw price created a high low entry right here, because this is the lowest low of this move right here. And there is a first entry short that triggered below this bar right here. And trader actually asked me about the count here, so I'm gonna talk about the count. This is a bullish bar right here. Make it even bigger. There's a bullish bar right here, and below this bar, price formed a first entry short. So if I'm going to mark it like this, price created a first entry short below this bar right here, but eventually the first entry short got stopped out on this big bar right here. So there's a new low, first entry short triggered below this bar right here, on this bar right here. It reversed higher, the first entry short failed, and it ticked higher, instantly reversed down, and a second entry short got triggered right here. So there is a two-legged pullback, second entry short on a slightly micro level. What I liked about this trade, because this was my trade that I took, I liked that this looked like a higher low, but it was below EMA. And a lot of times you not only get a first leg to a new low, you get second leg. This is the first leg. A lot of times you get second leg, and more importantly, you came from the failed breakout, so you may expect that we're going to reach all the way down to the support. So this is a second entry short, big bullish bar, and this is mainly a momentum entry, because you ticked higher, you instantly reverse down on a second entry short, uptrend played out with the break in your extreme, exponential moving average keeps holding price, and this is a big bearish bar. So even though you have a break in your extreme, for all of these reasons, you can expect another leg to new extreme. Now, as the market keeps pushing higher and keep pushing higher, you guys can see that this is having a little bit more of a bullish tilt here. This is a trading range, but we cannot be pushing all the way down to the support. We keep pushing higher above the EMA. So right now focusing on long, but you're going long directly into this resistance. So you want to be a little bit careful. There's a new high, first entry long pullback, second entry long. After break of a trend line, and you expect for price to create new extreme, This would be an aggressive entry. I will mark it only as a really aggressive entry. I don't like how far away from exponential moving average you are, but take a look at how many shorts probably got trapped going short here. Once price keeps making higher lows and you're now above the exponential moving average, and overall this really looks more of a bullish rather than bearish, because you expect for price to come from the failed breakout all the way down here. The fact that you stopped in the middle and reversed higher really tells you that there is something off here. Big push up. There's actually a new low, first entry short, second entry short, failure, reversal pattern. So you want to go long because EMA keeps holding price, but this bar is way too big, and the scalp was already made on an engulfing entry about this bar right here, so you cannot enter all the way up here. So price corrected, and there's a second entry long. If this touched the EMA, I would have liked it much better, but you can figure how many shorts probably got trapped shorting way too early while the uptrend doesn't have a new extreme yet. Price created a new extreme, push back down, and you're just now hovering around this key level. So you don't want to go short just yet. There's a lower high that formed because this is a little bit of a failed breakout. Push below EMA confirming bearish momentum, and there is now a push above confirming a bullish momentum. So what's going on here? So the best thing to do is just sit on your hands. You cannot take this lower high because you pushed back above the EMA on this big bullish bar, and there's a new high, first entry long, pull back, second entry long. Very tempting entry because the resistance now acts as a support, and key entry point, the exponential moving average, keeps holding price as well. So this is a two-legged pullback, second entry long, very big bar, really good bullish momentum, and you keep making constantly higher lows, but you're very close to these highs. It's way too big, and it's getting a little bit overall kind of stagnant. You just keep moving sideways. So I would recommend really just waiting here, but this is very tempting entry. Finally, you create another leg to a new extreme, first leg to a new extreme pullback, second leg, and you have a strong move below exponential moving average confirming the bearish momentum. So finally, uptrend played out with the break in new extreme. You're again above the trading range, and the difference from this move right here and this move right here is you move down here and then back above EMA. Here you only move down and there is no back above EMA. So this is how you can consider this, as this is now the reversal downtrend, and this was just a correction because you have a strong push back above EMA. So once you have a strong move down, you have a new extreme, and there is price forming a first entry short, pullback, second entry, first entry long, pullback, second entry long, but you're not looking to go long once we are coming from the failed breakout in a range structure. Same thing right here. You expect basically this pattern. You came from the failed breakout, you expect for market to go all the way down to here. You came from the failed breakout in the trading range, you expect for market to go all the way down to here. Uptrend played out with the break, first leg to a new extreme, pullback, second leg to a new extreme, and you're piercing through the exponential moving average. So you're expecting for anybody to go long in a second entry long to get trapped. You're below EMA. Unfortunately, the signal bar is really bad. You cannot go short, or at least that is my preference. I prefer to have a good signal bar even on failures. A lot of times on failures you can disregard the signal bar because it's a trap, but me personally, I'm just telling you my own personal opinion. I prefer to wait for better signal bars, so I would recommend to skipping it. But signal bars on traps are not as important, so you can definitely make a case for going shorty because the context is good here. If you zoom out, you can see we are playing the trading range, and we have a failed breakout, so we're expecting for price to go all the way down to here. It is a simple price action rule. There's nothing too complicated when it comes to this price action. As the price is pushing lower, trader is expecting for market to push all the way down to this key level. This is how the trading range works, and there's a new low, and there's only first entry short. This entry is hidden because the first entry doesn't have a trigger, and there's only a trigger below this bar right here. So technically this is just a first entry, but if you go on a smaller time frame, you would see a trigger below this bar right here. Now there are multiple hidden entries all over the place, but we don't call every entry a hidden entry. When we talk about hidden second entries, it has to have specific criteria why we call it hidden second entries. The first criteria is that the first entry is the one that is hidden, and it has to be under the right context, meaning this could be considered a good hidden second entry because of the first break of this downtrend, first close outside. So you expect new extreme to be formed, and it is at the key entry point. So we can consider this as a technical good hidden second entry. Nevertheless, high probability setup is a legit second entry short, and hidden entries are for advanced trader. There was new low, first entry short, second entry short, but it's already way too big, already new lows formed, and price really didn't give you a chance to enter. After you created first leg, pullback, second leg to a new extreme, according to price action rules, we expect for this trend line to be over, and we expect correction or straight up reversal. But there is no reversal occurring. There is not a single push above EMA. All of these moves up are failing consistently. So this is the good sign. When you come from a failed breakout, it can a lot of times generate strong momentum in the opposite direction. This is the good sign. This is where when you're playing this downtrend, you can start to look at it as a spike and a channel, because you keep making series of lower hikes constantly, and every single move up keeps failing. The fact that EMA keeps rejecting price every single time really makes you only focus on second entry shorts, because this is now a downtrend structure. And as a price action trader looking for high probability setups, we expect to get a second entry short at the key entry point, and there is no good second entry short. There's a new low, there's only a first entry, little lower high, but the bar is really big and you're going short directly into these lows right here. So this could be tempting, this could be aggressive entry. Advanced trader can recognize it because 2 key entry points are holding, and even 3, because this support is now acting as a resistance. We broke the support, came back, and the key level is a breakout pullback. It keeps holding, so you have multiple key entry points holding, you have a bearish downtrend structure, and you're looking for second entry shorts or failed second entry longs or lower highs. I just don't like shorting directly into the lows of the moves, but you can make a case for pulling the trigger here on these entries. If you have a second entry short right here, if you get a trigger below this chart this bar right here, this could be a nice two-legged pullback second entry short at the key entry point. Unfortunately, on my chart, it's just a first entry. For that reason, I'm not marking it, but a trigger below this bar right here would form a technical second entry short. This would be a great entry. There's the micro break, move to a new extreme, so we expect correction or straight up reversal. Price is pushing higher and strongly reversing back down. So when I see a strong move down like this, and this big bullish rally failed because it pushed back below EMA, I can expect continuation of a bearish downtrend, because this was a really strong move down. Okay, this is the first bar that closed above EMA all the way up from the very breakout. Price created a move down right here, and every single time EMA keeps holding price, and this is the EMA gap bar, first bar that closed above EMA and finally pull back. As I'm watching price pulling back below EMA, indicating bearish momentum, I'm expecting first entry long pullback, second entry long failure, and I expect for price to create another move to a new extreme. However, you push back up above the EMA with strong big bullish bar again like this, and your stop loss has to go all the way up below this bullish bar right here. You cannot place the stop loss below bearish bar right here, because this bar is inside of this bar right here, so you could get stopped out on the noise while this stop loss is being protected. So unfortunately, there is no entry here, because it's already, the stop loss is just way too big and the money management wouldn't make sense. You first triggered higher and then you broke lower, so you wouldn't have even got a chance to enter with a limit order. And EMA is getting very flat. Take a look how EMA is getting in the middle of these bars. It is a micro trend range, up and down, not the best entry, and there is no entry in this mess. So this is the area where you have to be patient. You cannot really cherry pick and look to force an entry. You just have to be patient. This is an area of consolidation. This is indecision in the market. Both buyers and sellers believe they are right, so we have to be patient here. There's a break, move to a new extreme, indicating that this tiny uptrend played out. Strong bearish move down, and you don't even get a lower high to sell and get a confirmation of failed breakout. So once again, you're just sitting patiently. You have a little failed breakout to the downside, but given how strong the downtrend was, I would be mainly focusing on shorts rather than longs. So the price pushed back above EMA, pushed back below, and you really don't get any decent entry. This is EMA still being completely flat. You're just working sideways. You created a new high, and you have first entry long, pullback, strong push below EMA, confirming bearish momentum, second entry long, failure, but you're shorting directly at the low of this entire move. Plus, when I'm watching this, I'm trying to look for quite a bigger pattern, because we just keep making series of lower highs, and price is failing to push above EMA constantly. Every single time you push above EMA, strong rejection. Push above EMA, strong rejection. At first, I was focusing on this pattern like this, but when it comes to bigger patterns, they generally take time to develop, And this was just right after the break, and I extended the trend line too quickly. After that, there was a long correction, and this was enough time for price to correct, and this was enough time for correction. This is the time where you can start looking for bigger patterns, something like this. So I didn't like really shorting yet into these lows, because you never, just because it worked once, it doesn't mean that it's going to work again. And there is no clean second entry short or failed second entry long, just a downtrend structure. It was range like, and you just have to be patient and you have to sit on your hands. But as the price is pushing lower and EMA keeps pointing lower and keeps holding price, this is now a strong bearish downtrend. So price action rules apply now, second entry short at the key entry point, and we're only thinking about selling. You don't want to try to reverse the market. You don't want to try to pick a bottom. You're better off focusing on the overall downtrend at this point on. So there's the lowest low of this entire move. So we're anticipating to get a second entry short at key entry point. There is a new low, first entry short, second entry short, but this second entry short pushed back above the exponential moving average. So, and there's an uptrend working higher. So this one is a little bit confusing. There's a little break, move to a new extreme, attempt to create new extreme, and a strong bearish reversal. This is a lower high, confirmation of this second entry short. This was my last trade for the day I took. And if you take a look at the entire structure, this is really a strong downtrend structure. So for that reason, still thinking about shorts is really great. This one would have been much better had we managed to close the 1 tick or 2 ticks below exponential moving average. But given how we trapped everybody going along, because buyers are looking at this as a new low, first entry short, second entry short failure above EMA. They're looking at this as a reversal pattern, but they're trying to reverse the strong bearish downtrend. And this is why you know they most likely got trapped, because this is looking like a nice failed second entry short. But the fact that it triggered higher instead of reverse and it's such a strong bearish momentum bar, I really like taking this entry, and look what a trap it was. Now the structure is still bearish. Now we have a new low, first entry short, pullback, second entry short. And as I'm looking at this, we actually have a trigger right here. When I was watching this live, I didn't have a trigger right here. After I reloaded the data, I can see a little trigger right here. So this is technically a second entry short. When I was watching this live, I had no trigger. I had 2 matching lows. So this entry right here was only a first entry short. But this is a 2-legged pullback to key entry point to the exponential moving average. And this is a second entry short below exponential moving average. This can be considered a high probability setup. Quick, easy scalp. That's a really shame that I ended up having it only as a first entry. But price keeps correcting, and you guys can see how exponential moving average in this downtrend keeps holding price constantly. And this can be considered as a double trap, because second entry short failed technically, even though it made scalp for us, but it failed, and everybody who went long too early is now panicking and they get trapped as well. And the exponential moving average keeps holding price. This bar is way too big to enter. The stop loss is big, but had it been a little bit smaller, this wouldn't be a great entry. There's a new high, there's a lower high, but you have to go short directly into these lows right here. So you always have to be careful. The downtrend is strong, correct, but it's always better to sell high at these corrections where it's counterintuitive, because you know people are trying to go long too early. You really want to be careful going short at the lows. This was a strong downtrend, so it worked this time, but a lot of times you can be going short directly into these lows. You will not be able to identify what the proper structure is. The downtrend may not be so strong, and you will get stopped out chasing the move at the very bottom. All right, so it's better to always be a little bit more careful. There's market is pushing lower. You don't get any decent second entry at the proper key entry point. It's already far away from EMA, and now you finally made it very close to the bottom trend line. And when you made it to the bottom trend line, you expect for price to create correction all the way up to this trend line. We ended up breaking the trend line eventually, and this is where markets start to be really volatile. And you guys can see we ended up pushing strongly to the upside. But as I'm looking at this, I don't see any decent entry, and there is a new high form right here. There's a little break, attempt to create new extreme, and there's a new high, first entry long, pullback, second entry long, failure. This would have been a great failed second entry long, because you have a break, attempt to create new high, and a second attempt, and it failed, but it closed above EMA. I'm going to mark it as a slightly aggressive. Had this one closed below EMA, this would have been much better. because we still expect for price to create new low. As price keeps pushing lower, I really expected here a second entry short, and I expected for price to finally create new extreme, but it never happened. Market just strongly reversed higher, and there was really no good clean setup. It's already getting way too late. So a lot of price action, a lot of good setups, and hopefully you guys find the video helpful and educational. I'm going to see you guys in the next one. So take care, everybody.